Well, whenever we have an attack like what happened overnight with the U.S. striking Syria, there is always a reaction in the market. However, Mike Eppel telling us this morning it's more of a knee-jerk reaction, and things seem to be leveling off now.
Yeah, indeed. Kevin, good morning. We're looking right now at stock futures doing virtually nothing. They initially did sell off when the news of this U.S. military activity in Syria broke late last evening. But, you know, it comes to the, well, okay, what's the ripple effect of this? Where does it go from here? And the response from various levels of the U.S. government, even the Democrats are saying that this military strike was a proportionate response to the chemical warfare that was indicated earlier this week in Syria. So everybody's kind of taking a step back, re-examining the landscape here and saying, okay, it doesn't have too much of a market implication, not in the short term at least. Longer term, we don't know. We did initially see the price for oil, for example, spike to a 4-week high. It, too, though, has settled down quite dramatically just in the past couple of hours as people wake up to the news and, again, assess the scenario. Price for oil right now just above $52 a barrel on West Texas Intermediate. You know, if you just look at the market numbers of the morning and didn't know the headlines, you would just kind of say it's a typical Friday morning. And I say typical from a market standpoint because today is actually a pretty big day on the economic calendar, which will be the focus coming up later this morning when we get the unemployment statistics for last month for both Canada and the United States. And from a market perspective, investors want to know specifically what's going on with that U.S. economy, more so than the Canadian economy when we're talking about interest rate policy and such, because it is the U.S. Federal Reserve and their maneuvers on interest rates that have been front and center for investor sentiment so far this year. In both cases, we're expecting job growth for the Canadian and U.S. economies last month. And again, that will move the Canadian dollar right off the bat this morning. We're also expecting to hear from Ottawa this morning about some changes to interprovincial trade regulations. We talk a lot about the north-south flow of goods between Canada and the U.S. There's a lot of trade barriers, actually, between provinces, whether it's on alcohol or other goods that are produced province to province, and how those go on a, well, primarily a shipping basis, whether it's by rail or by truck. But the talk is there's actually going to be a spotlight on the upcoming legislation regarding marijuana, medical marijuana specifically. There is not going to be much on the interprovincial rules regarding alcohol distribution. Those are expected to come at a future time. Sears Canada looking to do a reinvention. The company is set to open a so-called pop-up store on Queen West this weekend. And this is going to show off some new fashions for Sears Canada, discount prices and such as, you know, Sears Canada is looking to reinvent itself. That's the word from the CEO of the company, who says in 10 years' time, the traditional department store model probably won't exist. And we've heard certainly similar comments from the likes of Hudson's Bay Company earlier this week, which said the same thing about the U.S. and that U.S. retail market. And indeed, here in Canada has been one of the most volatile sectors of the economy so far in 2017.